Hi everyone, let's cover my Elliott Wave analysis on Bitcoin on the 4-hour time frame and the 1-hour time frame. Now, one of the scenarios that we are following on the 4-hour time frame is a larger corrective structure, either a double zigzag, a WX, and then an ABC down in a wave Y, after which we then look for continuation to the upside, or if price would move towards the upside in wave X and touch the 0.7 fib at 119.3k, it would increase the probabilities for a more sideways WXY corrective structure, after which we then look for price to move up. Now, by all means, we want this move to the upside to be a corrective structure inside wave X, and preferably wave X is touching at least the 0.382 at 113.8k, which has not yet happened with the price action that we have here. If I then go to the 1-hour time frame, then the internal count for wave X could look something like this. So we have a 3-wave move to the upside in a wave W, counted as a zigzag in a wave A, B, C. And wave B here is then a running flat A, B, C internally. So wave A, wave B, wave C, that's your W. Now after wave W, we're looking for a wave X. If wave X finishes here, we can count a flat ABC, and then there's your wave X. Alternatively, if that's the end of your wave X and you count a wave W, flat X, zigzag family structure, and a zigzag down to get a WXY. Now, in both of these cases, we are then looking for a wave Y. And if we consider a double zigzag to the upside to touch that 0.382 that we have just above us, which as mentioned is not yet touched when we look for the 4-hour time frame wave X, then a double zigzag would result in a wave WX and an ABC in a wave Y, touch some resistance at 115 or 118k, which I will show later in the video, and then return to the downside. Alternatively, we might want to consider a sideways WXY, where you then have a wave W, you get a wave X, and then a sideways WXY means that wave Y has to be either a flat or a triangle, which basically means you're looking for a wave A, B, C, D, E to finish. That's your wave Y, and then you continue to the downside. But as mentioned, we do preferably reach at least the 4-hour time frame 0.382 target for the larger wave X. Alternatively, you're going to have a flat structure in a wave Y, which then is a wave A, you get a B, and then eventually a wave C to the upside, impulsive, and after C, look for price to move down. Now, at the moment, I am mainly considering the potential of a double zigzag to the upside instead of a more sideways structure. So wave W, X, and then an ABC up in a wave Y, which can mimic the bullish price action as well, like more bullish scenario that I will show in a second on the 1-hour time frame. So then we have the bullish scenario on the 4-hour time frame, basically a finished corrective structure to the downside, WXY. Looks neat, nothing wrong with this at all. Wave A, B, C in a W, B is a triangle, flat in an X, ABC down in a wave Y. Absolutely makes sense. Definitely a scenario to keep in mind. And the invalidation is 107.2k. And then we get to the nitty-gritty, because over here we then need to count a multi-1-2, which I'll show in a second. But basically we need a wave 1, 2, or 1, 2, maybe some more, but eventually a wave 3 to the upside, followed by a couple of wave 4, 5s. You want the 4, 5s to take at least like a similar amount of time compared to your 1, 2s to create a bit of a nice impulsive structure. Something that is most common is a bunch of 1, 2s, take an X amount of time. Look for a wave 3 to the upside, which creates a gap, and then you create a couple of wave 4s and wave 5s. This is the simplified way of looking at a trending structure from an Elliott Wave point of view, a methodology that I invented a while ago, and you can find more information about this stuff and how to use this in your trading as well in the beginner's guide playlist on my YouTube channel. But basically, we look for a 3, couple of 4, 5s against resistance, short opportunity, and look for a retracement to the downside. And then the bulls would be looking for a corrective retracement to the downside. And once confirmed, every retracement afterwards is going to be a buying opportunity, as the minimum target is taking out this high and then later the all-time high potentially. Now that means that on the 1 hour time frame, we need to count a high probability motive wave structure. And this is at the moment a problem. So a motive wave structure is either a diagonal impulse or a multi 1-2. Well, at the moment, if we consider all the price action we have here, we can't really count a 1, 2, 3, 4, 5 structure. So it doesn't really work. We can, however, count a multi 1-2, which is the one that I have on my chart. And I'll explain this in a little bit more detail in a second, because I shortly want to highlight that diagonals don't work. So if we want to force, because it's literally force, a diagonal in here, then I have a few options. If you count a diagonal as a 1, 2, 3, 4, 5, then wave 5 is longer than wave 3, which is an invalidation for a contracting diagonal that is not allowed. If you count a diagonal as a wave 1, 2, 3, 4, and then 5, so 1, 2, 3, 4, 5, then you can see that the wave 5 price action is moving below the lower trend line of this channel. That's not what you like to see. You like a contracting diagonal to be contained between the trend lines of the channel. And then finally, if one counts a wave 1, 2, 3, 4, and then a 5, then yes, it's an expanding diagonal, which by itself is less common as well. But then your wave 5 is shorter than your wave 3, which is not what you like to see. So therefore, it invalidates an expanding diagonal. And actually, I should put this one over here, because again, we're looking for a wave 1, 2, a 3, a 4, and then a wave 5, but 5 shorter than wave 3. This trend-based subextension is then pulled from the low here of your wave 2 to the high of 3 to the low of 4, and you can see quite clearly it ends below the line. So these diagonals all don't work. And then we get to the multi 1-2, and the multi 1-2 at least is not invalidated, but the issue is that the first impulse to the upside has overlap between wave 2 and 4. So in a little bit more detail, you here have your wave 1, flat structure, again a running flat in 2, so it's wave A, wave B, wave C. You get your wave 3, wave 4 price action, final move up is 5. Now the wave 4 price action is overlapping with the wave 2 price action, not, zoom in a bit more, with your wave 1. And it is an invalidation of an impulse if 1 and 4 price action overlap. That's not what you like to see. However, here it's wave 2 and 4. And it is a strong guideline to not see overlap between wave 2 and 4 price action, but it's not an invalidation, which therefore means that we can at least consider the potential of this move up being an impulse counted the way it is on my chart. If we're then looking for a multi 1-2, then this has to be a zigzag family structure to the downside in a first wave 2, another 1 to the upside, and then get another 2, either an ABC that's finished here or a larger WX ABC in a wave Y to move to the daily naked point of control, maybe even at 109.8, and then after the WXY move towards the upside. But in general, you're looking for price to move towards the upside. And I mean, officially, I could move the invalidation to this low here as well and just say, okay, if this is your wave 1, you might consider a larger wave 2 here, where this is just the first structure. However, the issue is because you took out the high here, there is limited possibilities for a larger wave 2. You can only then look for a flat, a zigzag, or a running triangle, but a running triangle is not allowed in a wave 2 anyway, so we have to consider a flat or WXY. And a flat structure, you then look for a wave A, wave B, wave C, but it's very difficult to call or to count all of this as a single wave C because of this range being so incredibly big compared to any potential 2s. And counting this as a W, X, and a Y, well then W is a zigzag family structure, right? And your wave Y as well, but in a sideways WXY, where wave X takes out the origin of W, wave Y cannot be a zigzag if wave W is already a zigzag. So that is not great. So therefore, I currently consider more a double 1-2 compared to a single 1-2, and I have the invalidation at 109.3k. I do realize this was a little bit like nitty gritty and detail, so some people may have checked out there like, well, what's this guy talking about? But in a nutshell, preferably the invalidation sits at 109.3k and doesn't get touched for the bulls. If it does get touched, then we have to see what the price action here is. I might be able to recount it and move the invalidation down and still have a bullish scenario. But at the moment, I haven't really tried to force any larger corrective structures in a wave 1, a larger 2, and then get a 3 to the upside. So that is something I'll do another time if we do move to the downside and touch the invalidation. And then we get to the levels. So main areas of resistance, 115, 118, and then we get to like 120, 121. Main areas of support, if we talk about support below the low, that is, it's 105, around 101, 102, and then 90 is 6. We also have some news actually today here, Tuesday, September 9th at 4 p.m. Trade safe, can increase the volatility today. And then we have the probabilities. Now, at the moment, the probabilities on a 4-hour time frame would be highest for a WXY, which is a larger corrective structure. On the number 2 position, we then have an impulse over here, which is a finished structure. And on the 3rd position, any bearish scenario here, which I deem low probability, still proven otherwise. The reason why the WXY is in the number 1 position compared to the impulse is because of the lower time frame count, and the bullish scenario has the 2-4 overlap. That is the reason why the probabilities aren't too great for an impulse here, but it's not invalidated, very much valid. And what we want to see is a push to the upside. Now, in both of the 1-hour time frame scenarios, a WXY as well as the impulse, preferably you still look for a bit higher, because the 4-hour time frame wave X preferably touches at least 113.8k as a minimum target, which is not yet reached, but wave X can move all the way to a 0.7886. So it definitely has a big box, as you can see over here, and as price is moving, we just follow along. While in the impulsive scenario, you actually also look for price to move to the upside. So preferably in both of these cases, you are looking for price to move up, but the main difference between the two is the wave 4s and 5s, because in an impulse to the upside, you are looking for price to have your 1, 2, 1, 2, maybe a bunch more, and then you get your 3, and then you get a lot of 4, 5s, and this preferably takes similar, at least like around a similar amount of time than your 1, 2s, while in a more bearish scenario, where you're looking for a wave X, and you potentially form a double zigzag then in your WX and then a wave Y. Now share your wave Y here if this is the wave C on the way, 1, 2, 1, 2, 3, 4, 5, 4, 5, as Lupo showed in Discord as well. Sure, you get some 4, 5s, but the 4, 5s that you would expect in a wave Y to finish an impulse in wave Y, or a zigzag at least in a wave Y, you don't expect the wave 4s and 5s to be the size of this whole thing. So the 4, 5s are going to be smaller. You expect resistance to be hit at 115 or 118, and then price turns around without creating a lot of 4, 5s, taking a similar amount of time as what you see here. So that is the main difference between the two. So in both cases, you preferably look for price to still move up, whatever happens here in this range and all the sideways shenanigans, and keep an eye on the areas of resistance support, keep an eye on the 4, 5s as well. And then as we get new information, we just, take it as it comes and reanalyze the chart once we actually have some sort of a breakout of some sort of movement. So that being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.